On January 1st, 2021, Baby Limited, which uses IFRS 16, entered into an 8-year lease agreement for a conveyor machine. Annual lease payments are $28,500 at the beginning of each lease year, which ends December 31st, and Baby made the first payment on January 1st, 2021. At the end of the lease, the machine will revert to the lessor. However, conveyor machines are expected to last only for 8 years and have no residual value. At the time of the lease agreement, conveyor machines could be purchased for $166,000 cash. Equivalent financing for the machine could have been obtained from Baby's bank at 10.5%. Baby's fiscal year coincides with the calendar year. Baby uses straight line depreciation for its conveyor machines. So here we're told that this company follows IFRS 16, so we know that we're dealing with IFRS. So the instructions were asked to first calculate the present value of the minimum lease payments. So let's take a look at that. So let's do the present value calculation. So we've got our N is going to be, where does it say 8 years? It's an 8-year lease, 8. Our interest rate is going to be, and we're using IFRS and it says they could get financing for 10.5%, which is really the incremental rate. But again, that's the only rate we're being given, so we'll work with that. The payment on this lease, so what are the payments? It says the annual lease payments are $28,500 at the beginning of each of the year. So we've got minus 28,500. And beginning of period, of course, BGN. Okay. And we've got a future value of 0. There's no guaranteed residual value. So if we compute the present value, we're gonna get, with the begin mode on, of course, 164,995. That's the minimum lease payments under this lease. Okay, so we did A, we calculated the present value of the minimum lease payments. B says, discuss the nature of the lease to Baby Limited. Well, this is under IFRS 16, so it's going to be, let's go present value, minimum lease payments, nature of the lease. This is going to be a right of use asset because it's not low value and it's not less than 1 year. Prepare an amortization schedule for the term of the lease to be used by Baby Limited. Okay, we can do that. So 3 is going to be an amortization schedule. And so the amortization schedule is for the lease liability. So we're going to have date here, January 1st, 2021, sorry. January 1st, I should say January 1st, 2021, January 1st, 2021. We have that twice, January 1st, 2022, January 1st, 2023. Let's see, could I drag this down? Nope. 2024. January 1st, 2028. There's our 3 years. I'm not sure what I did here. 2025. Okay, so there's our 8 years of the lease, which you can see 8. And we've got our extra period here just for day 1. And we're going to have the lease payments. We're going to have the interest expense. Then we're going to have the amortization of the lease liability, and we're going to have the carrying value, okay, of the lease liability. So the amortization, this is going to be the carrying value times the interest rate. Okay, and here interest expense, sorry, actually, no, this is the interest expense, and the carrying value is going to be A minus B. This is A, and this is B, okay? Make this a little bit bigger, there we go. So our lease payment every period. So the first thing we're going to do is put in the carrying value of the lease. So we've calculated the carrying value here, 164,995. Okay, so that's our starting carrying value. Now we've got to have our lease payments. So our first lease payments also due here. So January 1st, 2021, and our lease payments are $28,500. Okay, and this amount is going to be the same every period, never changes. So we've got our total lease payments over the lease are going to be, this is our sum, this is our total over the 8-year lease. Okay, so then our carrying value is gonna be the carrying value of the lease times the interest rate, which we're told is 10.5%. So we are going to get, so actually, sorry, the first, you know what, I made a mistake there, and that's a really important point to illustrate. So the interest expense in the first period is always 0. And that's really important to remember, because as you're pulling your formulas down, it's an anomaly. So this is going to be 0. The amortization here is going to be this entire lease payment. So this carrying value is going to be this minus this, which is going to give us this carrying value of 136,495. So if we recognize the lease, the amount of the journal entry on inception, which isn't asked for, but just to illustrate, we're going to have debit right of use asset. And that's going to be 164,995. Okay. Then we're going to have credit cash for our lease payment. So 28,500. And then we're going to have credit lease liability of 136 of the balancing number, as we know. So it would be this minus this, which is going to give us this 136,495 right here. Okay, so this is basically recognizing that difference in period 1. And there's no interest expense because this is on day 1. We just made the payment. No interest would have accrued on day 1. Okay, then going forward, we're going to take the carrying value times the interest rate, 10.5%. And the amortization is going to be this minus this, the difference between the payment, and it's going to equal, the carrying value is the previous carrying value minus this amortization. We're always bringing the value of the lease liability down. As we make lease payments, we are decreasing the amount of lease payments we have to make in the future. And that's what this lease liability represents, is what we've committed to make in the future. You can see we just have a 25-cent rounding error. So in that case, what we would do here is simply add 25 cents. Okay, take off 25 cents. And we'll end up at 0, just like we need to be. Okay, and you can see our totals along the bottom here. And that is our lease amortization schedule. All right, so let's see what we have next. So we did the lease amortization schedule. D says, prepare the journal entries on Baby Limited's books to reflect the signing of the lease agreement. Well, conveniently, we just did that entry. 2, record the payments and expenses related to this lease for the years 2021 and 2022 and make the adjusting entries at the end of the year. Okay, so we recorded this entry. So that's the entry on inception. So the year-end entry for 2021 is going to be, so we have 3 entries. We're going to have interest expense on the lease liability. So we're going to record debit interest expense and credit lease liability. Interestingly enough, this entry actually increases the lease liability, but we'll see how this works in a minute. So we're going to have debit interest expense. It's going to be this number. And credit lease liability, and it's going to be for the same number. Okay. Then we're going to have the depreciation expense on right of use asset. So, or right of use, it's usually called right of use asset, ROU, right of use asset, ROUA. So we're going to have debit depreciation expense and credit accumulated depreciation right of use asset. Okay, and then here our calculation is going to be, we're going to take the right of use asset, which is this entire amount. It's going to be for 8 years is what this lease is for. So we're going to take this amount divided by 8 years, and this is a full 1 year period, 12-month period, so we don't need to prorate it. So we're going to get 20,624. So 20,624 rounded 2624. And that's our entry there. Now, there weren't any, one of the other things we need to watch out for, if there's any executory costs that we've taken out of the present value of the lease payment, we need to make sure to include an entry for that, although that would be in the next year when we record our lease payment, but there's nothing like that here. Okay, so now we've got, so we did that one. So we're asked to, planning of the lease, 2021 or 2022. Okay, so now we need to reflect 2022, January 1. So basically this is going to be January 1, 2022 journal entries. So we're going to have our lease payment. And what happens with our lease payment on year 2? Well, we know we're going to have credit cash and we're going to have debit lease liability. Debit lease liability, credit cash. This is an important entry to understand because the debit to lease liability I found a little bit hard to wrap my head around, although now that I understand it better, it makes perfect sense. We know that our lease payment every year is the same amount, this 28,500. 28,500, okay. So there we go. Now it's what is happening, why do we debit the lease liability? So here we're decreasing the lease liability by 28,500. And here we are, when we recognize the interest expense in the liability, we credited it. So here we increased the lease liability. At year end, we increased the lease liability by 14,331, which is here we increased the lease liability by this amount. And then we decreased the lease liability by the 28,500. Okay. So the net position then between those two entries gets us to this amortization of 14,168. So it's not as straightforward as when we had a bond, we'd actually recognize the interest expense and we would have this being the change to the carrying value. This is the case, but it's happening through two separate entries and we're getting to the net position of exactly like our statement says. So here we've increased our lease liability. Here we've debited our lease liability by 28,500. And then here we increased it by 14,331. So the net change is going to reconcile back to this 14,168. There's no executory cost that we need to recognize, so that's fine. So then the next thing we're going to do is have our year-end entries for 2022. So our first entry is going to be interest expense on the lease liability. So we're simply going to have debit interest expense and credit lease liability. I see up here, I've got this, it says liability. This should say lease liability. I'm sure you noticed that. Lease liability. So credit lease liability. And this amount is going to be, our interest expense is going to be the amount from our schedule here. So this time we're going to have this amount, 12,844. Be our interest expense, because the allocation between interest and principal changes each period, and that's why we need to use this amortization schedule. And our next entry is going to be to record depreciation expense on the right of use asset, whatever. Then we're going to have debit depreciation expense and credit accumulated depreciation right of use asset, right of use asset. And this is going to be for the same amount that we had previously because this is a straight line calculation. So it's still going to be this 2624 exactly. It doesn't change each period. And that takes us to the end of that part of the question. So now we've finished the journal entries to reflect the signing of the lease, the payments and expenses for 2022, and making any adjusting entries. Okay, so now we've got prepare a partial statement of financial position at December 31st, 2022 and 2021 for all of the accounts related to this lease for Baby Limited. Be specific about the classifications that should be used. That means short-term versus long-term. So let's do that. So we've got statement of financial position presentation, partial. And we're going to have, actually, to make this into good form, what we also need to do is put the name of the company. So we're going to have Baby Limited and the date. So it's going to be December 31st. I'm not sure what year this is. Let's see. 2022. Oh, 2022 and 2021. Okay, so let's say this is going to be 2021. Okay, so that's all you really need for a good presentation. It should be in the middle, but it's not a big deal. Then we're going to have non-current assets. So we're going to have under plant, property, and equipment. We're going to have a right of use asset. And less accumulated depreciation. Okay, so, and then under here, we're going to have current liabilities. We're going to have a lease liability, and under non-current liabilities, we're going to also have a lease liability. Okay, so what are we going to have here? So we're going to have this is actually going to have a note reference, note X. Okay, so let's just start with this. So let's actually just put here, let's put 2021 and 2022, okay? Just to keep it simple across the top. So what are we going to have as our right of use asset for 2022? Well, when was this lease signed? 2022. The end of the year of 2022, our right of use asset would have been December 31st, 2021 would be here. December 31st, 2021 would be here. So our right of use asset, we hadn't depreciated it yet here. So I'm actually looking at the lease liability schedule, which is not correct. So right here, our right of use asset would be 164 because we hadn't depreciated it yet, remember? And the depreciation in 2021. So by the end of the year 2021, we had depreciated it. So here's our year-end entry, depreciation expense. We had put this much into accumulated depreciation. Put these in the wrong field. So let me just change that. Okay. Come on. Okay, so let's just do that again. So we've got 164 here was what we had originally, and then when we recognize the depreciation, we don't hit the right of use asset directly, but we hit this accumulated depreciation account. So then our net value is going to be this minus this, which is going to give us this amount. Okay, and then for the next year, we still start with the same amount because we never hit that amount directly, but we have now we've got 2020, now I've got this in here, plus the next depreciation. So we've got 2 years depreciation now. So now our net book value is going to be that much lower. Okay, so that's what our right of use asset looks like, and that's all in non-current assets. Now for our lease liability, the current portion of this is just going to be our rent payment for the next year because we're only paying one payment per year. So we're going to have 28,500 in there. Not sure why that went in there twice. It's weird. No idea what's happening there. So 28,500. And here is going to be 28,500 too, because in the next year, all we're going to do is pay out 1 year's payment because there's only one payment per year. Now, the rest of the lease is going to be everything other than that payment. So in 2021, we've got this many payments left. So we've got 228 minus one payment of this. So we would have had, that's not right, 671 left. Oh no, sorry, 122, 327 left. So let's see where we get that from. Our lease liability, definitely not that. Let's see here, 127. Oops. $127 is what we have left. So what am I saying? 122, 327 is what we have left. So our non-current lease liability should be all the payments other than the one we're making here. So we're recording here the payment that we're making in 2022. So here we've got 164, 28,500. So our non-current lease liability is going to be 122. Here it is, 122, 327. So this is the carrying value of our lease liability, of course. Sorry, it took me a second there. Our carrying value is 122, 327. So right from our statement here, so 2021 is going to be this number, 122, 327. We're rounding this. Okay, and then for 2022, it's going to be the same thing. It's just going to be the next year down, which is going to be 106, 671, again, rounded. And that's the carrying value of our lease liability. That's the long-term value. Okay, so that gets us there. Now you can see that what we have here is note X. So, and let's just look at where these came from. So these amounts I think are pretty straightforward. I think we understand this. We never hit the right of use asset directly. Here we're hitting the accumulated depreciation. So you can see this is cumulative. It's increasing because we're taking it off the full original value each year. The lease liability, the current lease liability is simply our lease payment for the next year. And our non-current lease liability, this should say non-current, sorry, is going to be right from our amortization schedule. So you can see here's our on January 1st, 2022. So basically December 31st, 2021 is going to be, this is the carrying value of our lease liability. This is all long-term because it's going to be materialized over the future down to zero. So that's going to be our 122 here that we have. And then our 2022 carrying value of our lease liability that's long-term is going to be the next number here, which is going to be 106,000, which is the carrying value on December 31st, 2022. So one day before this date. And that's what our long-term balance is here. And that's why we need our amortization schedule too, so we have those numbers. Now, it's important to note that there's a note X here beside the long-term lease liability. And this kind of takes us on to a whole other thing. So what we have to do is in the notes to the financial statements, we have to present a schedule of future lease payments under contract-based leases. And this is for all future payments, So basically, this period, we're going to assume that we're just doing this for let's just say that we're doing this for 2022. Okay, so let's just do this for argument's sake. We're going to do note X as at December 31st, 2022. Technically, we would do this for both years, but let's just do it for one. So we're going to have the following schedule of future lease payments expiring December 31st, 2028, together with the balance of the lease liability. So basically what this does is it's a schedule of future lease payments, and it says that our lease is expiring December 31st, 2028, and it also is going to show the balance of the lease liability. So we're going to have the year ending December 31st for all of our schedule. So now we're going to have 2023 because this is in 2022. So it's the future. So 2023 is the next year because this is in our notes for the year end December 31st, 2022. That's why we're starting with 2023, 2024, 2025. Okay. So how many years is that? We've got 6 years. Okay. So you can group together anything past 4 years as to say 2028 and beyond, but we've only got 1 year left. So it makes sense just to show it then. Now our liability each year is going to be the same. It's going to be our lease payment. So we know this amount, it's always going to be the same. Our lease payments don't change. So because we only have one lease, we're just going to have a flat schedule like this. Now we're going to say total lease payments. And this won't match to our schedule above perfectly because remember, we have to be careful what periods we're picking up. So this is only for 2023 forward. So let me show you what I mean. Okay, for some reason, this is messing around. Okay, so our total payments here are 171,000. Now, when I look up here at first glance, it seems like it doesn't match, right? Because we have 228 and then only 171. But remember, we're only picking up the payments from, I think here, no, 1 year later, from here, 171. So therefore it does match. It's just that we're picking up different periods because we're already into 2023 for this schedule. The reason we're in 2023 is because we're assuming that this is in our financial statements for the year ending December 31st, 2022. So the next year is 2023. The whole point is to show your future commitments. Okay, so then we're going to say less the amount representing, put this over here, endpoint interest at 10.5% is going to be, let's just pull this over. It's going to be now what we need to do is pick up the interest from our schedule up here, but for the same period. So remember, this was our 171. So now we need the interest expense. So we're going to pick up 48,673 is what's going to be our interest at 10.5% on our lease liability. 48,673. Whoops. Okay, and then now we're going to have balance of our lease liability. This is going to be the net of those two things. This minus this. Okay, so the balance of our lease liability is going to be this 122,327. Okay, and that actually reconciles back to here. So you can see how that works. So what happened there? Let's make that red. So 122,000. So basically what we did is we said, okay, what's happening in the future? What have we committed to for rent? So we said, okay, well, we've committed to rental payments of this much for each of the next future 5 years, all the way up to the end of the lease. So it just happened to end in 6 years. Then so that's a total agreed commitment of 171,000 starting from 2023. So not the beginning of the lease, but the next future period. Then we say less the amount representing interest at 10.5%, and we pick that up from our interest from our schedule here. So this is our 171. Let's highlight that with something. So this is our 171,000. Okay, and then now what we're going to do is pick up the same period of interest expense. So 2023 forward is our interest expense of 2023 forward. And that sum, which I'll pull down here, Hang on a second. So that sum, which you can see here, is 48,672. So it's the sum of these years, 2023 forward. Our total interest expense is going to be 48,672. Our total lease payments going forward are 171,000. And those are the exact numbers that we've picked up here in our schedule. So you can see this is our 171,000, our lease payments going forward. They do have to be broken down by year. And then the interest at 10.5%, this came from our amortization schedule. And then the net, so the payments less the interest, give us the balance of our lease liability. And this 122,327 that we calculated through this table actually reconciles back to our current lease liability for that year end. So this is what would show in our year end financial statements as our non-current lease liability. So that takes us through that part of the question. Hang on a second, I'm losing control of my window here. Oh, come on. Okay, so then we've got it prepared the note disclosure for the fiscal year ending December 31st, 2022. And that's exactly what we did do. So a little bit more of a complicated lease question and a lot more on the disclosure side. So I hope that made sense.